Today is Thursday, May 12th. Yesterday was a pretty bad day for a lot of retailers, starting with Macy's, which got crushed. And you can see it here on this chart. It was already below its moving averages, the 50 and the 200 day. Got crushed yesterday to a new low. And I want to look at this in a long-term chart, put up a monthly chart, and look at that. Now you can see the Fibonacci levels I have in there. And it is down at the 61.8% retracement of this long bull market since 2009. So this is actually a place where you'd look to say, well, maybe I'd give this a shot. I'm not going to recommend that. The trend is down here. I don't like to buy these gap downs when things look really bad on the chart. And you can see this looks pretty bad on the chart. Doesn't look like a selling climax just yet. So anyway, Macy's at a big long-term level. Started the whole retail thing off pretty poorly yesterday. And then today we get news from Kohl's. Another big problem here. And if we look here, I'm just going to move this up to get the pre-market trading in there. You can see yesterday it actually broke through this descending triangle pattern. And it's trading around in this area this morning. So bad news for retailers. Or is it? I want to take a look at another one. This is Children's Place. Okay, here we see a lot of things happening, and I think over here we see a pretty textbook perfect double top pattern. Alright, a lot of things happening. Here's a support break, breaks on a gap. 50-day moving average breaks at about the same place. Alright, the next thing it does is it falls and stalls at the 38.2% retracement of the whole rally from late last year. And then it breaks down, falls lower, obviously heading lower. But let's see what else we can see here. Down at the bottom we have a bearish RSI divergence, higher high or similar high in price, much lower high in RSI for a warning sign. Let's keep going. There's other things that we can look at. Alright, what's here at the 38% retracement? Let's draw a horizontal line just over that line. You can see it's pretty close to hitting this peak right back here. So the chart is getting crowded. I'm going to just delete a few things now. Alright, so a lot of things happening that are near term and intermediate term that are kind of converging at the same time. Now let's draw a trend line and a channel or parallel line to it. So I'm going to click here, channel. I'm going to start from here because it makes sense. The lowest low doesn't give you a good line. And you can see that it hits the low in the middle of the trend. And I'm going to drag this parallel line up here. And you'll look under the label in a second. So here, hits this level nicely, breakout, falls back, and fails to make a higher move again. So it fails at the top of the channel. Another sign of pending weakness. Alright, now I'm going to measure the height of the channel. Let's turn it into a different color just to avoid some confusion here. And I'm going to measure it right there. Just going to drop a line down. So now we have the height of the channel measured. And again, it's getting crowded, so let's delete a few things here. Alright, now I'm going to take this segment and just drop it down from where it was. Look at that, it's pretty close to that 50% retracement we had on the Fibonacci. So again, a lot of things are converging, very symmetrical, very proportional type of pattern here. So I like this as the textbook double top pattern. And now the question is, how low is low? Well, if the 50% line, I'm going to borrow this one, the 50% retracement was around there. So it makes sense that that is a pretty good target for this current move. And if we haven't thrown enough things at you in this video, I'm going to measure the height of the pattern itself, drop that down from the breakdown point, and look where that lands. So anyway, the point is that a lot of things are now converging around this level. It's about 66 or so as a pretty good target for this breakdown. So as you can see, the stock is almost there. So maybe with retail falling out of favor, everyone's not liking retail stocks these days, perhaps that would be a good place to start looking for some sort of rebound. So there you have it. We got a bad retail sector, but through the whole thing, we have a beautiful double top pattern in Children's Place that looks like it's getting very close to its measured target.